Good evening. It is January 27th, 2022, 4:50 p.m. in the afternoon on the East Coast. And this is the Euro USD daily chart. Notice how strong this downtrend is in the euro dollar. Since last May's peak above 122, this has just been continuing to grind lower. We had a little bit of a blip up earlier this month, the first couple weeks of January. We got up to almost 115, and it just rolled over really hard since then. Got down to a little 111.32 today. So this is a multi-year low in the euro dollar exchange rate. So that means the euro is weakening relative to the US dollar. The US dollar is strengthening. And what is really concerning about this chart is that the euro dollar cross has a strong tendency to make um, an important higher low in January. For whatever reason, more often than not, it's not 100%, nothing is, maybe 70% of the time, the euro dollar will put in its high or low for the year in January. So if this is the high, then that means that we're going probably a whole lot lower this year. And this sort of ties in with the possibility that the Fed is about to make a policy error by tightening too aggressively, freaking out about inflation and tightening too aggressively. Obviously, they have a dual mandate of full employment and stable prices. They feel like they're pretty close on the employment part of the mandate, but the price stability part they're missing on. They're overshooting. Inflation is roughly about 7% right now. Tomorrow morning, we're going to get a lot of data, PCE inflation, core PCE inflation, spending and incomes, employment cost index data, and then consumer sentiment. So tomorrow's data deluge is going to be really interesting. There's a whole bunch of it's going to be dumped at 8:30 tomorrow morning. Then we get the sentiment data at 10 a.m. That's going to be market moving. Okay, I think that's going to be really market moving data. If the inflation data, the core PCE, comes in uh, as expected or a little bit less than expected, I think that will be good for risk assets. If it comes in hot, oh boy, watch out. Watch out. If the inflation data comes in above forecast, especially if it's really above forecast, we're probably going to go under 4,200 on the S&P. Gold got dunked pretty good after getting up above 1850 earlier this week. Sort of ran into a trend line that you could draw yourself off of these recent highs. It just ran right into it, and boom, more than a $50 drop. Since then, we closed today at 1795. Clearly, this 1800 level continues to be a magnet. So every time we've tried to jump up 40 or $50 above 1800, it's just gotten torn back down. And the same thing last month, gold dropped down to 1753. That was right after the Fed announcement too, and we ripped higher 100 points, right? So it's really interesting to just notice that the last two Fed announcements have seen big turns in the gold market. Last month, it was a major low was put in place and it turned higher. And this month, a major high was put in place and it turned lower. Just something worth noting. But at the end of the day, what is all this telling us? It's a big, messy range that continues to gravitate back to 1800. Nobody really knows when the trend is going to change or a trend is going to form and gold is going to really break higher and surge back above 1900, or it's going to break down and drop under 1700. It's just keeps coming back to 1800, keeps coming back to 1800. And here we are One more day left, this week, and we're about 1797 and change as I speak these words. So another weekly close right around 1800 could be in store. As far as the S&P goes, trading 43.42 right now in the futures. But notice this is so the week. Let's see where was it? Oh yeah, so this was the close at the end of last week. We closed about 43.90 right here, and look at this week's action. So it continues to be a very volatile oscillation. On the upside, we've gone as high as 44.46. On the downside, we got down to, what was it, 42.12 on Monday, right? So, about a 230 point range for the week in the S&P. But most of the action is focused probably around 43.50 to 4400. So even though it's been really messy and really ugly, and we've had some big down days this week, we're only 1% lower for the week overall, so there is a possibility that could close the week flat tomorrow, maybe even close in the green. Who knows? Keep an open mind. As I said, the economic data tomorrow morning is probably going to be really important. And also how people are feeling about Russia and Ukraine. That's a huge market mover right now. Just comment on a few charts. Remember 1 year ago, January 27th, GameStop. This was 1 year ago today, trading above, I don't know what, $300 a share at the time. And this is just not even a currently up to date chart, but GameStop is about 105 or 110 right now. So it's just amazing to think about the market sentiment 1 year ago. 1 year ago today, the market sentiment was euphoric. Everybody was talking about GameStop. Everybody was super excited about stocks and wanted to open a Robinhood account. And everybody was asking everybody else for stock tips and going on Reddit. And now look at where we are today. Today, just ugly, nasty market action. A lot of charts like Cameco, CCJ breaking down 4.5%. Tesla down 11.5%. Look at that full-bodied monster red candlestick. There's a lot of ugliness out there. A lot of ugliness. I said in the trading lab, the CCJ breakdown, the fact that it spent 4 days now under the $20 level. This is just, you can't own this. You can't own this, and I don't think you can own the sector at all. It's technically broken, and it's going to need some time to rebuild itself. There's no reason to try and get cute or tricky, try to be sneaky here and think that you're buying low. It's just ugly, and there's a lot of people that bought up over here and over here, and now they're way underwater, and their overhead supply now. They're going to be sellers into any bounces. And one more thing, Puma. So I suggest you take a look at the news this company put out this morning. Gold Explorer Junior, about a $40 million market cap. Um, Obviously, the chart had a tremendous run last year, kind of rolled over a little bit, and now it's digesting, sort of trying to base out here. This is one to look at. This is definitely one to take a closer, look at. Steady insider buying in Puma. There is a lot to like here. So that's it for me. Robinhood, a little volatile after hours, but down a lot. Pretty poor quarterly report. The size of their quarterly loss is breathtaking. Losing hundreds of millions of dollars on a quarterly basis, and even though they have a lot of cash, it's hard to think if they can't make money in 2021 when we have the GameStop mania, then when are they going to make money? Kind of an important question. So anyway, Have a good evening. Definitely be online tomorrow morning for the data dump at 8:30, and I'll see you in the trading lab.